All right, guys. So is everyone having a good time with all this winning going on? Winning upon winning upon winning. Well, I think if you're in several markets, you're going to be doing all right. If you're in the altcoins, you just keep getting annihilated day after day. And of course, in stocks as well, they've been getting absolutely crushed, except for several few. And there's also several markets which have been hitting new record highs throughout this entire uncertain and volatile time in the market. We're going to look at that, of course, the traditional markets, what's going on globally, Bitcoin, and we'll save the best for last, saving those altcoins for the end. Hit the like, subscribe to the channel if you are new here. We have a sale on TIA Premium this week. More on that later. Let's have a look at what's going on over the weekend before I dive into the charts. A nice, quick, succinct overview here. Iran, you got the UAE on this side, Oman over here. They're looking to close the Strait of Hormuz. Now, if you haven't seen any of the news over the last couple of weeks, congratulations to you. You're not getting filled with all of the crap that goes on in the world. But just a quick recap, essentially Israel bombing Iran, Iran bombing Israel, US bombing Iran, and of course there's a whole lot of oil in the Middle East there. Now the Strait is where about 20 million barrels of oil come through each day. And of course, that's going to affect the price of oil. And we've seen that spike on the open now when the markets have just opened this morning. So I'll get to that in the charts in just a moment. But that's the first piece that's going on. There's a lot of talk about this happening. And if it does, of course, it's going to send some shocks to the prices initially. And it definitely sends some volatility. But if you have been following along on the channel, you know that we've been watching this in terms of the commodity cycle and how the prices of commodities have continued to climb towards the peak of the 18-year cycle. Now, I don't sit here and suggest that I knew there was going to be a war, but just following the cycle, there was a very high chance that the prices were going to go higher. Now we see this come out. Now, it happens often, and I think it's important just to remember a couple of the comments on the side here. We're witnessing another oil crisis, but the response here from Kobisi is Iran has threatened closure 10 times since 2000, but it hasn't happened once. We shall see. So sometimes we get these big news events, volatility comes, you get a spike into maybe a top on the price of oil as an example, and then we see the markets just sell off over the coming weeks. Just like what we saw with Russia, Ukraine, big spike on things like wheat and so on, and oil, and then we also saw the market start to sell off at that point. Now, something interesting that's also developed over the weekend, just in Russia, China, and Pakistan proposed UN draft resolution calling for an immediate and unconditional ceasefire in the Middle East. Pretty ironic that they want a ceasefire over here, considering Russia's obviously in a war with Ukraine. China is in a war with everyone around them and obviously trying to take back Taiwan. And Pakistan literally just had a war with India. I think that was very, very short-lived. So even these guys are asking for a ceasefire in the Middle East with what's going on over there. Now, the new all-time highs on the back of all of this uncertainty that's happening is Tel Aviv. Of course, that's a major city in Israel. If you're unfamiliar with that, Tel Aviv Stock Exchange hits a new all-time high, 6,137. This was a couple of days ago, but again, at all-time highs while this is going on. And then at the top here, Iran, Tehran stock market also hits new fresh highs after it hit a high in, looks like 2021 and then 2023. And then again, we're hitting new all-time highs here. So is war actually good for the markets? Well, if you're just talking about price go up, well, that's essentially what we're seeing at the moment. Like that's a fact at the moment. How long will that last for? That's the next guess that people try to make. How much longer can this go on for? But yeah, like we've seen here, even with Israel and Iran, they've had their peaks. You got 2021, 2023-ish, then 2024, and again in 2025. Now they've really rocketed up. Same deal for Iran. US, of course, all-time highs. Australia, all-time highs. Not that we have that much involvement in the war at all, but essentially what's going on with commodities that also affects us here in Australia. But I digress. Now, a lot of people are obviously here for BTC, and I think it's important just to remember what Bitcoin is about, especially over the weekend when the traditional markets are closed. Bitcoin has dipped below 100 grand, not because the network relies on the Strait of Hormuz, not because the asset is over leveraged, but because it's the easiest to sell globally 24/7 for deleveraging other assets. Now, that might be the case with deleveraging other assets, but it's open 24/7. So you get to see what everyone wants to do. If once we start to see the US stock markets and commodities markets open 24/7, then I think we're really going to see what what the market thinks and feels minute by minute, as opposed to having to wait for that open on a Sunday evening, East Coast US, and of course it's Monday morning here for Australia, and then get to see what the market reaction is to the news over the weekend. There's utility in accumulating it when times are good. So yes, we've got times are good, but at the moment, it doesn't seem like anything is good. I haven't seen any sort of good news for the markets, whether it's commodities, whether it's traditional markets, or whether it's for Bitcoin and cryptos lately. But that doesn't mean that it's game over. And I've got some, let's say, hopium for you guys for Bitcoin and altcoins. So my investment theories as part of the Investor Accelerator, which is TIA Premium. There is a link to this in the top of the video description. We have a sale on it this week if you are serious about your trading and investing in the longer term and you're not here for the short term. We're the longer term game here. Check it out, link in the video description. That will be coming up this week, end of Australia financial year, but everyone gets the discount. So the theories that I've been tracking now on the channel for a very long time, obviously these are 18 to 20 year cycles. Bitcoin still in its macro bull, US stock still in its macro bull, real estate still in its macro bull. But the difference here kind of is that they're in their last phase. So when we tracked them earlier, they weren't necessarily in their last phase. We're coming into that last phase. In the case of the real estate market, we're in that second half of the cycle here. And now we are very well into the late stages of the second half of the cycle. As for the US stocks, similar sort of thing here. We've been up since 2009 for US stocks, and for real estate, it's been up since roughly 2011, 2012 for US real estate. So it takes about 14 years to get to that peak, and then about 4 to 5 years in the downtrend. US stocks, we're up now for about 16 years. There might still be another year or two left in this thing. We'll see how that fares with the fuel in the tank. And then, of course, BTC not doing too bad here. Now, I think this is a really good quote for today's video. Never buy a stock because it has had a big decline from its previous high. That's from Jesse Livermore, absolute legendary trader of his time in the early 1900s, 1920s, 1930s. And I think that's where he died at that point, but essentially made huge, huge money. Never buy a stock, and in this case, we could relate it to, say, altcoins, because it has had a big decline from its previous high. That just means just because something is down and down and down and down 90%, 95% doesn't mean it's a good buy. As is the case with Livermore, the case with Gann, who was around in the same time, as is the case with Wyckoff, who was around in the same time as well in the early 1900s. The case with Dow, the Dow Jones, right? He also was looking at sectors which were stronger than other sectors, and then look to trade those sectors as opposed to the weak sectors, like what people do with altcoins, just expecting those altcoins to go up just because they've been down 90, 95%. There is not really any other logical sense to it apart from it's down a lot, therefore it has to go up a lot. And that's not the case. And I think many are finding that out at this point in time. So I'll come to altcoins in a moment, but to recap where we were from, say, the last week and bringing everything up to date because of what's happened over the last few days. You see a lot of extreme volatility here. This is your your Goldman Sachs commodity index. So the commodity index is now reaching new fresh highs. You can see here we've hit 589. We're currently at 589 in the pre-market trading. This is Monday, which literally just opened, I think, a couple of hours ago now, but it's done a move equivalent to any normal trading day. Check that out, 9.6, 1.65%, and this is really just a fresh market here. There was the close there on Saturday morning, and now we have the open. So basically commodities skyrocketed on the open. Whether this follows through into the trading session tonight, the pit session, is going to be the next guess here. But even so, it's been up for the nearly 3 months here from the low. So 2.5 months since that April tariff low, and nearly 20% on the commodities index, which in my opinion is part of this 18-year cycles, because it's not every 18-year cycle, as the commodity cycle is about 50 to 60 years. 20, 25-ish years up, 20 to 25-ish years down, sometimes 30. It's a bit longer of a cycle. So you're looking at that move up, move down. We're into that final peak of that move up. And in this case, I had to bring that up, is because we're running into the end of the real estate peak as well. So we're starting to see the commodities peak, the real estate peak. And if you're following your fourth turning, if you believe in that, some people still disregard it, up to them. We're coming into the fourth turning, which is also a war cycle. We're coming into the end of that move, which generally invokes a lot of, well, I guess some sort of big war. We hope we don't have to go down that path. Obviously, we've seen it multiple times now in the last sort of 3-4 years. Russia, Ukraine, Israel and Iran in 23, Israel and Palestine again, Israel and Iran 2024, Israel and Iran 2025. Like, it just keeps happening over and over again in those areas. They're dragging in the US and things are starting to become a little bit escalated. So running into this peak, running into the commodities peak, we're seeing more prices reach new fresh record highs. Holding above this 50% at $75 a barrel is most likely going to bring on further upside, another retest of the 80 bucks. If it can break out of that, next highs 85-ish, then to the next 50% level at about $92, $93. I bring this up and mention it each time because this can lead to inflation. And if we start to see inflation rise again, it's probably unlikely that we're going to see those interest rates fall too far. Maybe they do get a little bit of a cut over 2025, maybe 1 or 2, but it's going to be very difficult to keep cutting this if you're seeing inflation as well. That's why we keep watching metals. Obviously, there's a lot of copper that's being used in the economy. We keep watching the energy prices, and this just all comes together for the peak of this 18-year cycle. If you keep seeing interest rates having to hold where they are for the bond markets as well, with the yields also rising, that is going to be some serious problems for the everyday household and their mortgages, which a lot of people have expected these interest rates to drop a lot further than where they are. It hasn't been very much of a drop here, from 5.5 down to 4.5 over the last several months. So following commodities, we head over to the traditional markets, S&P 500. The market has opened this morning, a slightly lower open, and has now rallied since that low, but really hasn't taken out the low of the day when Israel first bombed Iran. That was the 13th, Friday, the 13th of June, 10 days ago, and it hasn't dropped below that low. Our cycle analysis has taken us pretty well on track with what the market has done over the last several months. So it's the red line in the background here, and it has pretty much tracked the 5-year cycle very, very closely. The next thing that we're watching out for is basically an uncertain time through June through to around August, where we will see another correction there just based on this 5-year cycle. But essentially, with the red line, it doesn't break out here. You basically have a trading range that is now forming over the coming 1 to 2 months, just like what we saw through the month of May into the early part of June. You started to see a trading range, a little bit of a breakout, and it's come back into this range now. Looking at the 20-year cycle for the S&P 500, similar sort of thing here. Basically, a correction into June is what we're waiting for, and then basically a trading range through to Q4, where things start to get a little bit clearer towards the end of the year. So I wouldn't be surprised if this runs throughout summer, and then of course our winter here in the Southern Hemisphere. The dollar also has opened a little higher here. I think this is still all part of the consolidation after it broke down into a new 3-year low price. It's done this multiple times over the last 10 years. So you can see here the breakdown, the consolidation, that was a new 3-year low. You can see 165 weeks. Of course, you can do the maths, that's about 3 years. Again, another breakdown here in 2020 into 2021. Consolidation, that was nearly a 3-year low again. And here we are around 172. We started this several weeks ago back here at around 165. So almost exactly the same as the prior time when it broke down. And here we are again. We're just, well, for the US dollar, that is, it's just hovering here now, trying to consolidate before it tests well, maybe test some higher prices. I've got a couple of levels here on the chart looking at around 100, 101. That's the same horizontal line we've had here for several months, of course, even going back years because that was the previous level, but then also the 50% level. So we're looking at the high to the low, and then that's at around 103.5. None of that has occurred yet, but the slowdown has occurred. Therefore, we're expecting or anticipating, I guess, that there could be further slowdown here for the US dollar. But that's not going to be anything, I think, to worry about, especially for Bitcoin and the commodities, because they've already started to show a little bit more strength here, breaking through those 50% levels. So if you made it this far without a Bitcoin chart, congratulations to you. There's a lot of people who just want to see a Bitcoin chart, but without understanding the rest of the global markets or everything else that goes on out there. Bitcoin isn't a standalone feature. I think most of you get that. Hit the like, subscribe to the channel if you want more of this type of analysis. But here we were 10 days ago looking at the double top potential for BTC, the breakdown of the 50% level, and then this was the next target down at $93,000 to $95,000. Bitcoin has just hit 98,200 and had a nice reversal. It has closed higher, closed back above the swing low of $100,300, so 100,300, and has hit the 100% level. So that's of this double top here. Now, I said at the time when it was breaking down through this zone 105, because it was holding above 50%, it just meant that there was less chance, or it was going to take a little bit longer here to potentially reach this zone. So it could still reach the mid 90s. That's this 150% level, that 1.5 there that you see on the chart, reading at basically 95,000. But this has basically slowed the move. Now, what we've also seen in this time, and this is the latest capitulation day, obviously a lot of the world war events and things going on at the weekend. This is the capitulation day in question here, Sunday, the 22nd of June. We are now sitting at a balanced 100% repeat of the previous correction from 112 down to 100, projected from 110. So again, the market's done 12,000. It did it again, roughly about $12,000 move. There are signs that this could be a low forming, but the most difficult point now is that it is extremely early in this move. You have to appreciate that the high was now 32 days ago, so a month ago. And to try and call a turning point, which may just be showing up on an hourly chart to suggest that over a month of the move down is going to be changed by a few hours, is very, very, very early. It can happen. Obviously, we've got a couple of good signs here now with the 100% repeat bouncing here in the last couple of hours. The daily close was relatively okay. But for a longer turning point, we need further data. So here is a good start. If it holds up, that's probably a good sign. If it gets back above $105,000, an even better sign. And then 106,500, which is that horizontal level that we've been tracking here on the channel for quite some time. That's going to be one of the next nails in the coffin for the bears and the bulls to take over again. For now, the bears have got that control. So that's the upside. That's the hopium there for BTC. Now, should we continue to see this break down and decline from here, the next level is this horizontal that I've got on the chart. That's sitting at around $98,000, basically where that low came in. It bounced from. That was a previous top. Also, several previous tops back in February. You can see 1, 2, 3 here. And then the bounce in January before we had that lower swing top form for 106, and the market came down. So another important level there, basically around $98,000. And of course, you guys know the next level below that, the mid 90s here, around $93,000 to $95,000 as well. All that said, that is still all positive signs for BTC. The breakdown of that 93, that's where I'll start to get a little bit more concerned about this entire run. But even still, you've got these tops back at 88, 89,000. Hasn't happened yet. Things are still on the side of the macro bulls. Yes, the short-term bears have had some pretty good short-term trades, so hopefully they got their profits. And we move on. Others.D. This today is also having a slight bounce. So I did a video on Friday. You guys might recall that. It was the altcoin multi-year bear market, basically explained. We went through that in great detail. And today, we're down now about 5% to this low with this slight rally going on for for the others chart. So let's whip it back up to a weekly chart here as it's hit a new daily low. The others dominance has hit a new weekly low. And if you're unfamiliar with this chart, this is basically your top, all your altcoins, excluding the top 10, which has been in a multi-year bear market spanning back to January of 2022. Down, down, down. The only times that you've seen any sort of relief was this rally, June into April. Is that it? June 23 to March 24, sorry. And then this move here. You had a few weeks of upside, November to December. And it's not every single altcoin that's moving either. This is pretty much just making up some of the majors there, having a big move, and then everything came crashing down. And through that period, of course, the market has gone lower, meaning that in most cases, all of those gains have now been wiped off, unless you've taken your profits through that period. So the market is still speaking very heavily towards traders as opposed to buy and hold, or buy this dip, or buy this run up, or buy this breakout and hold. Anything coming referring to holding altcoins has almost guaranteed you a loss. There are going to be the odd few, and depending when you got in, that's going to be the big difference here. But the charts are still suggesting further down. However, to throw in that bit of hopium now, the percentage move to the downside to this next potential support level is roughly about 10 to 11%. So this support level comes in at about 6.2% for the others. So that's right down here, and currently sitting at about 7%. So potentially not too much further to go here for altcoins. Now, that doesn't mean that you're going to get a bounce from this level like we did in 2020, 2021, or if you had this little bit of a run up in early 2020. That could mean that we do get a short-term bounce, and you got to watch out for this next resistance level. So there has been support sit at around 7.9, call it 8% for a round number. That's this low here, June 23, also the low in Feb 25, and then basically all of this zone here before the market broke down. So if there is going to be some support here at 6.2%, and then a bounce, watch this chart. If you're in altcoins, watch this chart to see whether it gets rejected at about 7.8 to 8%, meaning right here, and it rejects, comes back down and breaks this low. That's an extremely weak position, most likely going to come back and test something in the 5s, potentially in the 4s, or for the hopium, it breaks out of 7.8 to 8%, comes above, sits there, and then starts to break higher above 9%. That's what I went into further detail with that video. So I'll leave a link to this at the end of this video. If you can't find it, go to my channel and look for that particular video there. That'll explain what other measures to look out for a turning point for altcoins. Now we look at USDT dominance. This is for the total market, Bitcoin and altcoins as well. The last couple of days have not been great for Bitcoin or altcoins because, well, obviously one, the price has gone down, but the main point here is that it broke above the 50%, which is at 5%. So Saturday and Sunday both broke higher. Now the slight saving grace at the moment is that we've tested those highs at 5.2 and sold off with a lower close here at 5.1%. So that's really the only short-term positive that I can see here for the market, is that it is getting sold off. And of course, the Bitcoin and some of the altcoins are getting bought up at this low on the back of the capitulation. So we are seeing some fresh highs yet again, this case for USDT dominance, which is not what we want to see. We don't want to see fresh highs on stablecoins, which means people are basically taking profits. As we talked about for the last couple of months, it had basically been in a rock and a hard place, finding support yet again off the all-time support line here, which is called all of the previous Bitcoin all-time highs, altcoin all-time highs, and for whatever reason, we're still seeing influencers and hopefuls and all sorts calling for another altcoin season, which has essentially been down the entire time. I'm not opposed to an altcoin season. You get one, but generally it's very much a gambler's mindset. And I talked about that at great length. I'm not going to do it again. Try not to get into that because that basically gets people wrecked. Just follow the charts. That's going to be the safest way, in my opinion, because of basically the history here and what has happened time and time again. Most likely it's going to happen yet again. So we're getting very close to the end of this move here. You can see the resistance above. You can see the support here. The time frame to the exact peak of this comes out in November. I don't think I hope we don't have to wait until November of 2025. It's 4 or 5 months away, 4-ish months away, I think. Maybe it happens sometime into the late part of Q3. That brings you up into September, where we finally get a resolution here, whether it breaks higher, which is not what Bitcoin and crypto want to see, or it breaks lower. That's exactly what everyone wants to see, and takes out the lows here at 4.4 and of course 3.7, which has been the absolute pinnacle level here that we want the market to break down from. Total 3 is having a recovery week. Here we are, Monday, just open, and we're seeing a slight rally here. This was a week that just closed. This is total market cap excluding Bitcoin, ETH, and stablecoins. This one here is exclusive to TIA indicators. Link to this is also in the video description. It gives you a clear image of basically the altcoin market. It's been rejected multiple times here at the 50% level, came back down, tested this 560 billion, and at least for this week, it's trying at the moment. Monday is very early, of course. There's still 7 days to go in this week. Last week was not great because it tested it and closed beneath that level. So the final nail in the coffin here, I would say, is closes below 440 to 480 billion dollars, and now only about 100 or so billion away from that level. Finally, Bitcoin dominance, before I get into a couple of the altcoins there, has hit a new fresh cycle high. And I think we have to go all the way back to 2021 to get a reading this high. Now, it's been quite slow and methodical, higher highs, higher lows, with the odd freak out like December 2024, quite a big drop off there for Bitcoin dominance. That was your altcoin season. But since then, it's basically all been taken back from BTC. I have talked a couple of times about the possibility of it running up to 70 to 72%, back where this resistance was in 2017, 2019, 2020, 2021. Do we do it again and then see a bit of an altcoin season? That's the question. But for the 4th time breakout signals that some of you guys are aware of, if we get this breakout, so 4th time meaning 1, 2, 3 tests, maybe this is a 4th test here and it breaks, that is going to be diabolical. Is that the right word? Going to be catastrophic for altcoins, because if that was to break through, that could then run somewhere up to these levels, high 70s, maybe the 80s, and then it's all part of the imagination above that point. I'm not going to discuss any further, because anytime I even just circle the word 95, people automatically think that I'm saying dominance is going to run to 95%. That's not what I'm talking about at all, but I'm just very much watching that roughly 70% level, because that's where it has hit multiple times in the last 8 years, and it has been rejected from there. So again, although there could be a lot more pain in this process, there is all the chance, because it has happened in the past, that we get rejected there, and you can get a little bit of reprieve in those altcoins, maybe try and make back some of those losses. Now, the major ones we're watching are ETH, which has had a relatively, I hate to say it, but for the week close underneath the diagonal, it's still above the 50%. So again, it's just putting itself in a bit of a shitty situation here. Ideally, it's got to be above $2,400 now, because that line just keeps getting higher. But it did come back down and test dead on the 50% level at 21. I think prices underneath 21 is going to be very, very bad for ETH. It's hit that level multiple times, used it as support, and then broke down. I think at this lower high and then a break of this 21 again, that's going to be really bad for ETH, because it's so far hasn't put in a higher high. That's the dilemma here for Ethereum, even though everyone's been talking about it and it's just got to run to new all-time highs. That's the dilemma there, underneath that 21 in a bit of strife. Now, the Bitcoin charts for several of these major alts, Sol BTC, new fresh lows here. Sui BTC on the verge of a new fresh low underneath 2,300 Satoshis. It's why I always talk about this 50% level. Through April and May, when this thing just shot up in that 1 week, 50-odd%, it couldn't break the 50% above it. So it ran up, couldn't break the 50% of the downtrend, and has now fallen all the way back down. That would have been a much safer zone, and from that point, broke down, broke the 50%, broke underneath the diagonal, and through this whole time, for the last 4 or so weeks, just in a really weak position. XRP finally has put in a new fresh low. We check it out on the daily, just happened today. So put in a new fresh low. No man has ever reached to excellence in any one art or profession without having passed through the slow and painful process of study and preparation. The longer I live, the older I get, the more I appreciate this sort of quote here from Mark Douglas. I did talk about it in the previous video. Just learning from the older guys. I thought I'd add this to the end of the videos, hopefully make it a little bit more, I don't know, wise for those that have made it this far. Like, subscribe. The point of this, in my opinion, is that we can't be gamblers looking for those quick wins out of any sort of painful areas that we might find our lives in. If you don't like your job and you're sort of rushing to those influencers that are showing you the fancy lifestyles in Dubai or something else like that, they've got their own issues going on, and there is no quick way out. If you find a quick way out, there is going to be pain somewhere else. Obviously, I'm speaking from experience. You've probably seen that sort of thing in your own lifestyle as well. You might get a quick relief somewhere, but the pain is just waiting for you around the corner. So why not face it head on? Go through it, study, be patient, take your time. Things will work out in your favor if you give it the time and don't try to base it off some sort of gambling, hopeful plan out there. If you enjoy that, let me know in the comment section. I much prefer looking at the trader psychology around things. Helps me, hopefully it helps you. And I'll see you guys back at the next video. Till then, take care and peace out.